Glad to know you're still with us. And yes, I have three gentlemen with me. Mr. Charles Fakroha, thank you for joining us today.
Thank you. It's always a pleasure.
Absolutely. Mr. Omodio, thank you for joining us today.
Yeah, thank you, my sister.
And joining virtually, we have Mr. Garuba. Good to have you join us, sir.
It's you.
All right. Well, before we went on that timeout, we're looking at what the market is doing. Let's start with you, Mr. Omodio. Talk to us about the market.
No, actually, I think the market is kind of repeating what happened the previous week. We said that this week we expect the mixed trend to continue, and also September being a very dicey month, that this trend will come, because once we've seen now the macroeconomic data in terms of consumer price index, we're looking forward to see the outcome of the MPC meeting. This will shape this month to usher in the last quarter of the year. But for investors that are designing the market, whatever is happening now, should not panic anyone, but rather take advantage of prices coming down and also play with defensive and some cyclical stock to kind of edge against inflation. As we speak now, I see that equity market remain anywhere you can think of edging, anything called edging in the in the investment world now. But if you look at the fixed income market, with Nigeria economy entering into stack inflation already, as we just read, it's a sign that yes, you must look at investment that will even be closer to inflation figure or above it. But if you are far below the inflation figure, you're already in red. And I tell you, this is the worst time for when you want to hold cash. You are holding cash this time. I think you are risking
exactly.
your life, because I remember I bought a loaf of bread, just last month now, around July, around 700 naira. That same bread is selling for 1,000 naira now, for a space of less than 2 months. That means if you have cash now of 700, you can't buy the bread now.
I actually don't even want to think about it. The thought of it,
that's why,
it's not
for me,
one.
any asset that you can edge, to preserve your value and also grow it, I think that's what you should be looking at. Absolutely. And that's why when you said the portfolio managers and pension fund are worried, I'm also agree with them, because yes, they have the big fund to play for long term, but where you are putting your fund matters a lot. I know that the fixed income is deep to take anything they are putting there, but at the same time you need to edge and also have your manage people's future for long term pension for that. Where you can, I believe that with this, at the end of the day, if you can see better Q3 numbers as we have seen first quarter and second quarter already, then that should guide them what to do. Because for end of second half, we didn't see PFAs playing the market. That's why you can see all this why the foreign traders have been very low to show that we're not having institutional investor in the market. But if at the end of the day, from third quarter result, they see opportunity that are coming back, that would be nice for the market and also support their own portfolio at the same time.
All right, that's a very good one. Just before we go, is there any updates from the capital market? I hear there is one. Talk to us about it.
Yes, you will recall the CIS conference that was done in Benin, very successful. And I must commend the new inductees and, of course, the new president. And of course, the special thanks to the governor of Edo State for hosting us. It was very peaceful and very good conference, because the participants had a field trip to Okomo Oil, I think, of course, Presco, and that was really, in line with the theme of the conference for this year, which is, the capital market supporting agricultural productivity in the country. Then there is also an update of the capital market committee in the House of Representative Capital Market Committee. They'll be doing a public hearing, I think for next week. That's on the 20th and the 21st. Now, they're already telling the stakeholders, that NGS Group, people like Ambrose, Mayoga, everybody is in the capital market, registrars, issuing houses, other exchanges, to write their own paper and, submit. Then it's going to be a bill for an act, to repeal the ISA. ISA is the Investment Securities Act 2007, and enact the Investment Securities Bill. Then, kudos to CIS again, a bill for an act to repeal the CIS Act 2004 and provide for the establishment of Chartered Institute of Securities and Investment. So we're going to be seeing a new nomenclature for our esteemed institute, and that is going to be all encompassing, because now I just say Chartered of Stockbrokers, people think it's only stocks, but now it's going to be Chartered Institute of Securities and Investment, so covering all the areas in the investment markets.
All right, that's interesting. Well, very quickly, let's move on to our next topic. For now, we're looking at inflation right now, and looking at inflation, we would say that Nigeria's inflation rate has surged further to 20.52% in August 2022 from 19.64% recorded in the previous month. This represents the highest rate since September 2005. Now, the recently released Consumer Price Index CPI report by the NBS, that's the National Bureau of Statistics, showed that Nigeria's CPI rose by 20.52% year-on-year in August 2022. On a month-on-month basis, the index rose by 1.77% compared to the 1.82% increase recorded in the previous month. Well, now, since the stock market anticipates that, there is a certain amount of inflation each year and adjust what the expected returns should be against the expected inflation, can we then say that there is no cause for alarm? After all, this is not unexpected inflation. Mr. Garba, that's for you.
Yes, actually, the rising of the inflation for the month of August, we all expected it. Remember that there is already, most of our inflation are cost push inflation.
Yes, yeah.
The price of diesel has gone up, the price of energy has gone up, and also the exchange rate. And remember that a lot of our products selling in the market are most of them imported using the parallel market to get their exchange rate. So we are not surprised. But when you look at 20.52, it's something that can say surprise in view of the fact that for the past 17 years, we have not witnessed this. But globally, when you look at it, the exchange rate that is going on, the inflation that is going on in US, UK, Europe, and other parts of the world, you say that ours is a better. Because even as of last year, we are talking about 13, 14, 15%. So when you look at it, what increased to date is just mere about 30%. When you look at the increase in the inflation in the UK, is about 300%. The same thing in New York is over 200%. So ours is, we can say that is fairly managed. Even down to Africa, when you look at our inflation 20%, you cannot compare it with Ghana that has over 33%. And the same apply with other African countries that have higher than us, like Zimbabwe. All their Angola, their inflation is much higher than ours. So we can say ours is in the better chance.
All right. Well, I guess you were agreeing with him, Mr. Fakroha.
Yes, the inflation rate, like you have said, is not a surprise. But if you compare to what has happened in other climes, you could see that, yes, probably we have managed as a little better. It's when you expect something and it comes that way, then, again, it's not really a surprise. So that's why I agree.
It's not unexpected.
It's not unexpected,
so
yes.
We're not caught unawares.
In fact, people have even predicted a much more higher figure. But
yes,
with this figure, it's okay.
All right.
Yes, that does not say that all is well.
Well, very quickly, let me come to you now. It's expected that during a period like this, there are some stocks that, investors should go for, and there are some other stocks that investors should not, go for. Talk to us about these stocks.
No, when it comes to, I've just said, when it comes to inflation, yes, I've said at the intro that only equity market you can use now to hedge anything called hedging, because below that instrument are below the inflation figure. That means if you really want to hedge against your portfolio, we look at companies that has a strong earnings yield and also dividend yield to know where they are going. Also, their nature of their service or their product is in an elastic demand product that even when they increase price, there still be demand for their product. These are where you should hedge, and also are they commodity back or real estate back, stocks. For example, when I saw the life of UPDC and UPDC jumping up and down in the market, I'm not surprised because if you really want to hedge against inflation, you can't go buying pure house. You can also go to buy real estate back instrument or stocks, and that is also a form of hedging. And also, if you look at what is happening in the oil sector is also a very cyclical sector that goes up and down. You can't have 100% credit in the oil sector. But to speak now, because crude oil price remain up and what is happening in Russia and Ukraine, I think there's also potential in those sectors, knowing that crude oil prices are remain between $90 and $100. For me, it's a good one. That means to support their bottom line at the end of the day, because prices of energy across the globe is high. That is sector we can look at. Also, we can look at the agricultural sector. We know what is happening there. Also, look at our GDP. These are sectors that are supporting our GDP. Look at the telecom industry today. This is also supporting the GDP. And if you look at the PFA, the strong PFAs that also support this market, they are the ones that spread the market post COVID-19. But for this year, after from April, they slowed down in the market. But now with this kind of we're seeing a inflation already, I think they also be thinking, where can we go to edge again? That's why I said they are coming back to the market. We might see improved liquidity or volume going to the foot, especially being the last quarter of the year. Now from October, after seeing the third quarter result, these are what will shape market. And so for investors, I said go for defensive stocks, go for cyclical stock, and also look at industries where there's what inelastic demand, that even when there is increase in price, demand for that product remains. That's why I believe that strongly healthcare is good. Look at oil, look at the telecoms and agriculture. Also, there's good thing in banking sector. People might not know. Banking sector fine.
Very quickly.
Banking sector fine. You might say the return has always been below inflation. But for example, now look at the life of GT code. As we speak now, the dividend yield is already about 15.9%. Then if you are in GT code now, as you are buying at this time, plus any capital appreciation at the end of the day, because if you enter now, this is the price going to bench your dividend. If you come at the end of the day, you're sure getting 10 naira dividend for GTP. And also you already tactical books online now. If you enter now plus the price appreciation, know how you go ahead of what 20% to 12%, you're already ahead of inflation.
All right.
You can use that also to play. It's the way to also manage your portfolio as we speak now, than not going to a place or holding cash.
Oh, holding cash, it's not something anyone should even try right now. Well, we take a break now. When we come back, we'll continue the conversation. Stay with us. This is Analyst Hangout. All right, welcome back. Good to know you're still with us. The Nigerian Exchange Group, NGX Group PLC, the holding group for the defunct Nigerian Stock Exchange and its business arms, will be seeking to raise about 35 billion naira in a hybrid initial public offering as the group moves to consolidate its recent conversion to a public limited company. The group plans to undertake a multi-instrument capital raiser, its first issuance after converting from a mutual, member-owned, not-for-profit organization to a share-based, profit-making, public limited company. Now, while the details of the hybrid IPO are still being concluded by NGX and its professional advisors, the offering is expected to be split between 20 billion naira equity offering and 15 billion naira debt issuance. Similarly, the NGX Group released its dividend policy, promising improved returns. The documents which provides, I see a lot of persons already laughing right here, but of course, let's continue. The document which provides guidance on the dividend payable in cash in a year pegged the range of dividend payable in cash between a payout ratio of 25% and 75% of the distributable profit of same year to which the dividend is applicable. I want to start with you, Mr. Garba. NGX Group seeks to raise 35 billion naira in a hybrid initial public offering. Now, the board, from the published notice to shareholders, is seeking this amount, preferably in dollars, without providing an articulated capital allocation plan as well as utilization plan. And then when we look at their report, in 2020, it wasn't a good one. And then they reported 6.80 billion naira income for the year 2021. And 6.52 billion naira expenditure. Now, is this a good deal for investors? I asked you almost two questions, but let's just start from anywhere. I have other panelists here who would definitely share their own views. So, Mr. Garba, let's start with you.
Well, honestly, I'm very surprised for the NGX asking for this money. But we need to know the purpose of asking for this 35 billion.
Exactly.
Remember, this is an institution that has been retaining all their earnings year in, year out. So what do they do with the money? The infrastructures are already there. Do they intend to acquire other West African exchange like Ghana or Cote d'Ivoire? If they intend to acquire this so to increase their size, fine and good. Or do they intend to acquire the existing exchange within the Nigeria so that to increase their size? If that is the question, I will say good enough. Otherwise, I need to know what do they need the money for? Because most of their services are on the air and they don't need much.
Exactly.
And they are not paying any dividend. So we need to see the purpose why they are coming to the market. Yes, of course, you will say that it was initially restricted. They want to extend it to others. But the brokers are already selling. And that is good enough. And if you look at the prices available in the market anytime, any day, whatever quantity you want to buy is available for sale. So I do not envisage exchange coming to the market, but we wait to see the purpose of coming to the market, because that is very, very key and essential.
All right. Well, let's start with you, Mr. Fakroha, before we get to hear Mr. Omodio almost can't wait to talk.
Okay, I will agree with my doyen, because the purpose of any offer, you know, the investors, the shareholders who want to know what is the purpose, what are you, acquiring this money for. They need to know. And of course, the NGS, okay, now that's the NSC before, people need to understand that it used to be an exchange that is mutual. Now they have been demutualized. That is no longer being run by members again. Everybody is now a shareholder. But their operations, the company was unbundled. We now have three, and I'm sure some of us are still grappling to understand how they will operate these three companies, making up the NGS group. Yes, it was in their initial plan that by the time they demutualize, they will come to the market to raise funds. Well, probably the most important thing there is they want to diversify their shareholder base. Like my Dorian have said, that's Mr. Crowley. Yes, the main people who got these shares were former dealing members, but they are now trading license holders. And some of them are already selling. I know of some firms that have they've sold all their holdings in that in the NGS group. Yes, maybe the NGS group is just trying to say, okay, we want to diversify more our shareholders base, and that's why they're making this issue. However, you don't just collect money from people when the way you were operating before, people are not really satisfied, because you read some of the reports there. Yes, and of course, I also know that they did a lot of restructuring. Some of their key staff were also allowed to go, Yes, I'm sure maybe after this COVID-19, that most of us are still working remotely. As we speak, it's occasionally that you see the NGS group open to stockbrokers, maybe when they have visitors and all that. So we believe that with this money they want to now get from the public will go a long way in ensuring that whatever thing, but we need to know their plan. We need to know what these monies are going to be used for, because we are seeing equity there, 20 billion, and of course 15 billion for debt. So we need to really understand what they want to do with the money. And I'm calling on our great our member, who is the current group CEO. We know he has performed before and is going to take this NGS group to the next level.
Yeah. All right. Finally, let's have your thought.
Yeah, for me, in equity investment, timing is very, very important. And as my two guys have spoken, I would say that NGS coming to raise money is too fast. We've not seen really performance to justify where they are coming from for them to ask for another fund from the public. Because before now, it has been a non-profit-making organization. We have not seen where you are going, your roadmap. Just bumping to the market again to raise funds. For me, I'm very, very surprised. The only thing I would say is good from what they're doing now, they're coming out with the dividend policy that will now open all the eyes of investors, that even in different companies to ask questions when they go to AGM meeting is very, very important. Because I believe that NGS coming from offer, what's it called, either public offer, whatever I call it now, is not a wrong timing. That's fine. The purpose might be good, as Alaji said, either to, but for me, the timing is not the wrong one. But the only good thing I can see in all this, their packaging is those, they've opened up for investors to know that, yes, this dividend policy should also apply in other quoted companies on the exchange. That now, that, if your distributable income or profit should be from 25 to 75. Then, we can plan that. Before now, we know, because we're in the market as analysts, that most companies, they have 50% payout, 45, depending. But now what I've seen, then, when you go to AGM now, for those that are 10, you can ask questions, you can look at what they are paying you. Is it below the 25% range you have seen here? Is it that, you have to give a bonus? For me, that is the only thing I see in that document that I because they've not performed for me to say they are coming to either in dollars or in naira. There's no performance to justify that. I will say it anywhere. But if they come with what they want to do, we can also look. But for investors in Nigeria that are really designing, this is not where to rush to kind of investment. We know that, yes, any day there is door of exchange open, they are making money. We want to see that represent on their on their numbers, on their earnings at the end of the day. If you look at their Q1, Q2 this year, they are not too attractive, For me, more or less in Q2 there was so little improvement. Q1 was out of it, but Q2 saw little improvement. For investors in Nigeria, there's not just panic to rush into such a decision. Let them wait and see where the company is going. You can buy it from the floor, even though you're not buying from the offer. When you see good performance, not to try to go in, but for me, coming with offer, whether it's still at 2 naira, I don't care, but let us just wait it. Those that want to patronize that should go ahead. But for me, I want to wait to see where they are going, because every investment is against what? The future. I want to make money. For me, it's a good one.
Exactly. Well, we take a commercial timeout now. When we come back, we'll definitely continue with the conversation. Stay with us.